There are a lot of financial gurus on the internet, and if you consider me a guru, I guess I would fall into that bucket as well. Though I like to consider myself an average guy who likes to make videos about money. Regardless, what I find most fascinating about the many of the more famous financial gurus are their backgrounds. Most notably, their failed financial ventures. And surprise, surprise, many of these financial gurus have gone bankrupt at least one point or another. Now, this isn't to say we can't learn from people who have financial failures, because you know the old saying, failure is the greatest teacher. But it's good to understand where people are coming from. So in that spirit, let's review 10 of my favorite life and money lessons we can learn from these money gurus who have gone broke, and a few that are still broke. And hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. The number one life and money lesson we can learn from broke financial gurus. Understand the danger of leverage, the danger of debt. All financial gurus who went broke have different stories. Dave Ramsey went broke at the age of 26 when the bank started calling the loans, which he borrowed heavily to amass a $4 million real estate portfolio. He had 90 days to repay millions of dollars, which he couldn't do, thus he declared bankruptcy. Robert Kiyosaki's company, Rich Global LLC, declared bankruptcy in 2012 after losing a $24 million court judgment. Apparently, the company didn't pay the proper royalties on his seminars, and they didn't have enough to pay when they lost in court. Donald Trump, while best known as the 45th President of the United States, have been considered a financial guru in the past, having published books such as How to Get Rich and The Art of the Deal. While he himself has never declared personal bankruptcy, his business have declared bankruptcy 6 times. Now, despite the different stories, what do they all have in common? Debt. In all their cases, they over-leveraged themselves, and when luck tipped against their favor, they or their company found themselves bankrupt and broke. Many people, and especially financial gurus, make fun of people who shy away from debt, constantly talking about how much more we can make if we use leverage in a smart way. However, my thought is this: while we may not have a building named after us or be known globally, we at least won't go bankrupt. The number 2 life and money lesson we can learn from broke financial gurus. Understand the risk associated with real estate investing. Real estate is an attractive way to get rich. You hear of these cool sounding strategies like flipping, wholesaling, and live and flip, and cool terms like seller financing, cap rate, and LTV. And you can't help yourself but be like, wow, how do I get in on that? I mean, if you had a choice between called an exciting real estate investor or a boring index fund investor, which one would you choose? But understand that with most exciting things in life, there are risks associated with them. Dave Ramsey, who I referenced earlier, had amassed a real estate portfolio of $4 million by the age of 26. He was technically a millionaire by his mid-20s, but it was a short-lived success. His largest lender, to whom he owed $1.2 million, was acquired by a bigger bank. The new bank demanded Dave Ramsey to pay the entire debt off within 90 days. And soon after, another bank called and demanded $800,000. He was forced to file personal bankruptcy. Smart real estate investing can be a great addition to your net worth. I personally own real estate, and they have been a great addition to our portfolio. However, understand that there are risks. Risk of tenant not paying your rent. Risk of home prices falling if your property is in a risky neighborhood. And worst of all, risk of debt being called if you over-leverage and don't structure your debt wisely. The number 3 life and money lessons we can learn from broke financial gurus. Beware of temptation to overreach. Or to put it bluntly, greed. Robert Kiyosaki made good money writing and selling his bestseller, Rich Dad, Poor Dad. Then he started to leverage the success of his book to other services, which I'm all for. Everyone learns differently, and the more ways to share knowledge, the better it is. The issue is how far he went with this model. One of the workshops associated with him was called Learn to Get Rich, a high-profile workshop series that advertised how we would teach people how to invest in real estate and stocks. The advice was questionable at best, but the seminar was at least free. However, there was an upsell to a 3-day seminar at the cost of $500. $500 for 3 days? Well, if there's some value from it, maybe it might be worth it. But this is where it gets interesting. At the 3-day seminar, they would upsell the participants to a premium course, which was priced up to $45,000. You heard me right. I did not misspeak. I said $45,000. Now again, I'm all about more information, and paying for good advice is at times a good way to get better information. However, it has to be reasonable and fair. If you're helping someone with their finances, I could see $500 being reasonable. I have paid that and more in the past for good advice. However, how can one consider $45,000 reasonable for any personal finance class? That I feel is a bit overreaching. As consumers, be careful when things seem way too overpriced and the promise of outcome way too good to be true. It is often greed talking. In the spirit of things that are way overpriced, let's talk about our phone bills. If you think your wireless phone bills are overpriced, let me tell you about Mint Mobile, who I'm partnering with for today's video. Mint Mobile offers premium wireless for as low as $15 a month, and you don't have to sacrifice any coverage, speed, or data, given they're built on the nation's largest 5G network. They also offer a modern family plan that lets you set up a super affordable family plan with as little as 2 lines. Mint Mobile is able to keep costs low because their business model is based on direct online selling. No costly retail stores and no salespeople. Thus, they're able to pass those savings directly to you, the customers. You know how I love efficiency. So if you want to not overpay and start saving money on your phone bill today, use my link, trymintmobile.com/financialtortoise, or scan my QR code. It's not only a great way to save money on a recurring expense, but an easy way to support this channel as well. Alright, with that said, let's get back to the video. The number 4 life and money lesson we can learn from broke financial gurus. Understand that just because one knows money, or at least sounds like they know money, that doesn't mean they have true wealth. Robert Allen has been at times called a true legend in real estate. He wrote 2 bestsellers, Nothing Down and Creating Wealth, and has held many seminars across the country, teaching people how to get rich by buying foreclosed properties on the cheap. However, this financial guru who taught people how to get rich declared bankruptcy in 1996. Robert Allen claims the bankruptcy was due to a landslide that completely destroyed his home. While that seems somewhat plausible on the surface, you have to wonder, why would a so-called real estate expert not have homeowner insurance? Or more so, if he really had money, true wealth, could one incident like a landslide force him into bankruptcy? I think not. So understand that just because one is marketing themselves as a money expert, touting this and that strategy to get rich, that doesn't mean that person is actually wealthy. They might be an expert in marketing, but not at building true lasting wealth. The number 5 life and money lesson we can learn from broke financial gurus. Know what you don't know. After reading some money books and investing money, you may feel like you know things. However, understand that there is so much more that you don't know than you know. Albert Lowry was a well-known financial guru in the late 1970s and well into 1980s. He wrote How You Can Become Financially Independent by Investing in Real Estate and ran lots of get-rich-quick seminars in hotel meeting rooms across the country. At one point, he was worth $30 million. That's a lot of money today, but definitely a lot of money in the 80s. However, in 1987, he filed for Chapter 7 bankruptcy. Albert Lowry made a lot of money through seminars. He was an excellent salesman whose talent lay in persuading people to pay up to $495 to attend his weekend seminar. Part entrepreneur, part self-promoter, and a part teacher, he would offer advice on everything from buying real estate with no money down to running a small business and re-establishing credit. And as you can guess, his advice was unworkable for most people. But that didn't stop him from grossing more than $40 million between 1969 and 1985, according to court documents. The big mistake for him was investing his earned money in questionable ventures. As an outgoing man, he was driven by a desire to be liked. Thus, he agreed to questionable business ventures with friends, such as a health club, a restaurant, and a movie, instead of sticking with what he knew best: selling seminars. Wise individuals aren't smart because they know a lot. No, they're wise because they know what they don't know, which is most of the time more than what we know. Never invest in a business you cannot understand. The number 6 life and money lesson we can learn from broke financial gurus. In the line of wanting to get rich quickly, be careful of our temptation to show success. This lesson comes from yours truly, the Financial Tortoise. I've made so many money mistakes in my 20s because of my wrong assumptions about wealth. I seriously believed that being rich was about having nice things. Maybe it was my pent-up frustration at not being able to afford these things when I was younger, or my parents' expectation that I needed to look successful after all the sacrifice they made in immigrating to the United States. I'll never really know, but the fact was that I bought into the myth that rich outward appearance represented financial success. Who cared what our bank account said or how much I had in investments? Being rich was being able to valet my car, wear an Armani suit, dine at the finest restaurant, and give big tips like a super cool guy. But I learned after some harsh lessons that true wealth is actually what we don't see. Wealth is built when we don't buy the expensive 7 Series BMW, or the Armani suit, or dine at the fine Michelin restaurant. Only when we have the self-control to limit our purchases and invest that saved money do we have any chance of building wealth. Ironic, isn't it? In our modern capitalist society, we equate someone's wealth with the image of what we believe is wealth. However, most often, those that go out of their way to show the world how successful they are most often the ones who don't have true wealth. The number 7 life and money lesson we can learn from broke financial gurus. Learn from our mistakes. We all make mistakes. If you don't think you make mistakes, you have a lot of soul searching to do. Because it is only with a recognition of how dumb we can be at times can we really grow. Carl Richards is best known for his personal finance books, The Behavior Gap, and the One-Page Financial Plan. And just to be clear, Carl has never declared bankruptcy or been accused of anything shady. However, he did have to short sell his home during the 2009 financial recession. It never looks good if the guy writing about personal finance is in financial trouble. However, like Dave Ramsey, Carl didn't try to hide his mistake. He actually learned a lot from it and even wrote a New York Times article about his experience. If you'd like to check out the article yourself, I'll have a link in the description below. But the short version is that Carl and his wife overbought a home just like everyone else during that time. They bought a home that was almost double their initial budget, and because the bank was willing to lend them 100% of the purchase price, they thought they were making an okay decision. Then when the housing prices in Las Vegas began falling, that is where they bought the house, Carl realized his life was built in a house of cards. They got to a point where they simply couldn't afford the home payment. So Carl and his wife decided to work with the bank to do a short sale, an offer of a property at an asking price that is less than the amount due on the current owner's mortgage. He lost his home and a part of his dignity, but he learned tons from the experience, and this helped him to become a better financial planner. We're all going to make mistakes in our lives. Let's not try to hide them, brush them aside, or ignore them. They are one of the greatest lessons that can propel us forward, but only if we embrace them. The number 8 life and money lesson we can learn from broke financial gurus: be content. Find contentment with enough. If you could find a theme across all these financial gurus that went broke, is that they were at least at one point in their lives greedy. They weren't content with what they had. They wanted more. Bernie Madoff is famous for running the largest Ponzi scheme in history, at the time worth about $65 billion. He defrauded thousands of investors of billions of dollars and shocked the whole investment world. But what is most fascinating is how long he ran the scheme for. He ran the scheme for more than 20 years, right under the nose of the SEC and the rest of Wall Street. Bernie Madoff had 2 businesses that he was running, a stock brokerage and an asset management business. The legitimate business was a stock brokerage business. The asset management business was the front for his Ponzi scheme. And the interesting thing is that the legitimate business, the stock brokerage business, was actually extremely lucrative. Bernie Madoff wanted the Wall Street elite's respect, and he could have gotten that just through the legitimate business alone, as a market maker and an electronic trading pioneer. However, he wanted more. He wasn't content. He didn't know how to be content. I had more than enough money to support any of my lifestyle and my family's lifestyle. I didn't need to do this for that. I don't know why. Greed can ruin our lives if we don't check it. We can take unnecessary risks. We obsess about more. And worst, our moral standards can get compromised. So let's find contentment. The number 9 life and money lesson we can learn from broke financial gurus: be careful of who you listen to. Or at least understand the whole story before you start making investing decisions based on a 20-second TikTok roll or a too good to be true get rich pitch. This is especially important when we're watching YouTube videos, scrolling through social media reels, reading blogs, and listening to talks at conferences. We're only hearing a snippet of the whole story, most often the edited, sanitized version. We're only hearing how this real estate investor is now a multimillionaire after implementing the no-down strategy. Not the part about how this real estate investor tried 6 other strategies prior before finding this one that worked. We're only hearing the bit about how this day trader is now raking in $50,000 a month after taking a $5,000 day trading course by the social media influencer. We don't hear the part about how this was only the last month. And of that $50,000, $45,000 came from one lucky trade that was leveraged. Bottom line, always be careful of who you listen to. Be a little suspicious. Good information is like diamonds. They require a bit of digging to find, but the world is full of fake gold glitter that will easily distract you if you allow it. The number 10 life and money lesson we can learn from broke financial gurus. Bottom line, there is no perfect money guru. There may be money gurus with perfect hair, but that doesn't mean that guy has the perfect money advice for you. As you can tell from all the money gurus or experts I covered so far, they've all made their fair share of mistakes. Not a surprise given that we're all human. So recognize that fact. There is no such thing as a perfect money guru that has the perfect advice. That doesn't exist because we're all such different individuals with different life circumstances. So take what you find useful and be okay with leaving the rest. Or vice versa, don't just dismiss someone because they went bankrupt once or a few times in their lives. You can still learn something from everyone. A smart individual knows how to take the best from every guru, author, writer, and apply them to their lives. Thank you guys for watching. In the line of good money advice, if you'd like to learn some of the traits of people who are really good with money, please check out my video here. Until next time, all the best.